Most traders know the names Warren Buffett, George Soros, maybe Paul Tudor Jones. They're giants, the icons, the household names in finance. But there's a hidden layer to this world. Traders whose results are so extraordinary, whose mindset is so sharp that those who do know them treat them like legends. These are the traders who didn't become famous because they didn't want to. They didn't build their career selling courses or speaking at conferences. They built them by showing up day after day through the market booms and collapses and quietly beating the game for decades. And here's the best part. What made them great wasn't some secret algorithm or a 100% win rate. It was a way of thinking, one you can learn and apply starting today. So in this video, I'm taking you inside the lives and lessons of 7 underground superstars. You'll hear how a floor trader survived Black Monday, how a ballroom dancer made millions from hotel rooms, and how one man's discipline was so perfect he almost never lost. Before charting software, before streaming news, before online brokers, there was Linda Bradford Raschke. She began her career on the floor at the Pacific Coast Stock Exchange in the late 1970s. Imagine the sensory overload, the roar of voices, jackets flashing like team colors, runners sprinting across the pit with handwritten orders, no price feed, no chart overlays. You read the market by watching the other traders' body language, by sensing the shift in the noise of the pit. Linda didn't just survive, she dominated. She moved to the Philadelphia Exchange, became a market maker, and later launched her own trading firm. Over decades, she traded through every market climate imaginable. The 1987 crash, the dot-com mania, the 2008 financial crisis, each time reshaping her strategy to match the new environment. Her secret? Adaptability. She kept trading journals like scientific logs, recording every trade, setup, and market condition. If something stopped working, she didn't try to make it work. She dropped it without hesitation. For you, here's the translation. If you've been forcing the same strategy in a market that's moved on, you're burning time and money. Linda's mindset says stop defending your old edge, go find a new one. And while Linda thrived on constant change, the next trader built his success on locking into one edge and never letting go. Mark Minervini didn't start on Wall Street. No hedge fund job, no insider connections. He started with a small account, made plenty of mistakes, and then made one decision that changed his career. Focus on one specific high probability setup and master it completely. That setup, high quality growth stocks breaking out from tight consolidation patterns. He stripped away every other distraction. No penny stocks, no fad sectors, no maybe trades. If it didn't meet his criteria, it didn't get his money. He refined this for years until it became second nature, winning the US Investing Championship with a return north of 150% in 1 year. But here's what's important. It wasn't the setup itself that made him great. It was his refusal to dilute his edge with noise. For you, this is the challenge. The market dangles shiny new objects every day, but every time you chase something outside of your plan, you reset your learning curve. Minervini's success came from saying no far more than he said yes. But even the sharpest edge is useless if you can't survive the bad trades. And our next trader built his career on that single truth. Bill Lipschutz turned a $12,000 inheritance into hundreds of millions trading currencies for Salomon Brothers in the 1980s. But if you asked him the secret, he wouldn't tell you about a killer entry pattern or a secret indicator. Talk about what he didn't trade. His first question on any position: what is the worst thing that can happen? If that risk was unacceptable, the trade was dead before it started. Bill knew that survival wasn't about making the most money possible. It was about avoiding the one mistake that could end your career. For you, this flips the common mindset. Your job isn't just to find winners. It's to eliminate the trades that could kill your account. Survive long enough, and the winners take care of themselves. And while Bill focused on protecting the account, the next trader believed you had to protect something even more valuable: your mind. Ed Seykota was one of the first to use computers to test and execute trading systems in the early 1970s. His trend-following methods turned small accounts into millions. But Ed's true genius was understanding the human side of trading. He believed that if trading consumed you, it would destroy you. His systems often automated, and he refused to be chained to the screen. He famously said, "The elements of good trading are 1. Cutting losses, 2. Cutting losses, and 3. Cutting losses." By building joy and sustainability into his process, Ed avoided the burnout that ends so many promising careers. For you, this is a reminder that trading is a marathon, maybe even an ultra marathon, not a sprint. A system that makes you miserable will eventually fail, not because it stops working, but because you stop following it. And while Ed focused on joy, the next trader built simplicity so deeply into his process, he could run it from a hotel room halfway around the world. Nicholas Darvas was a professional ballroom dancer in the 1950s, touring the world and performing for packed theaters. During downtime in hotel rooms, he studied stock charts mailed to him and price updates sent via telegram. He developed what became the Darvas box method, buying breakouts from clearly defined ranges on strong volume, holding until the move was over, and ignoring everything else. In less than 3 years, starting with $25,000, Darvas made over $2 million, all while traveling. His secret wasn't insider info or constant screen time. It was simplicity. One method followed perfectly without overthinking. For you, the lesson is clear. A strategy doesn't have to be complicated to be powerful. It just has to be something you can follow consistently. The next trader didn't just accept losing. He made it the foundation of his entire approach. Larry Hite didn't come from a background that screamed future hedge fund legend. Born legally blind in one eye with severe dyslexia, he struggled through school and gravitated towards games like poker, not because he was a gambler, but because poker rewarded those who thought in terms of odds and probabilities. In the early 1980s, he co-founded Mint Investment Management, one of the first hedge funds to rely entirely on systematic, rules-based trading. Mint grew so rapidly that by the end of the decade, it was managing over $1 billion. What made Hite different was his radical acceptance of losing. He knew from poker that you could have a winning strategy even if you lost half the hands, as long as the hands that you did win paid far more than the ones that you lost. In the markets, this meant risking a little on each trade, cutting losers quickly, and letting winners run far beyond what most traders would tolerate. For you, this mindset could be liberating. Most traders waste mental energy trying to prove that they're right. Hite's approach flips the game. Expect losses, plan for them, and size your trades so they don't hurt. Then when you do catch a trend, let it ride far longer than your comfort zone. Monroe Trout is the kind of trader who almost sounds like a myth. A Harvard economics graduate and former Salomon Brothers trader, he went out on his own in the mid-1980s. And between 1986 and 1993, he had only one losing quarter. There's a story from the pits that says it all. During a particularly volatile trading day, while others were yelling into phones and chasing every tick, Trout sat calmly at his desk, executing his preset orders like nothing was happening. He was following a plan he built long before the chaos began. What made him stand out wasn't just the patterns he found, it was his absolute refusal to break his own rules. If his system told him to stay out, he stayed out. If it said to size down, he sized down. To him, breaking a rule was more dangerous than losing a trade because it cracked the discipline that made the whole system work. For you, here's the takeaway. Imagine picking one rule, just one, and committing to following it without exception for the next month. Could you do it? Trout did that with his entire playbook for years. And that's why he could step away in his 30s with more than enough to retire. Linda Raschke adapted faster than anyone else. Mark Minervini mastered one edge until it became automatic. Bill Lipschitz made survival the priority. Ed Zakota kept joy at the center. Nicholas Darvas proved simplicity wins. Larry Hite embraced losses as part of the plan. Monroe Trout executed discipline so perfectly, he almost never lost. They all played different games, but they all followed the same hidden rule. Protect yourself, protect your edge, and keep playing long enough for your advantage to show. If you can take even one of these mindsets and live it in your own trading day after day, you'll already be ahead of most people who open a brokerage account. If you want to keep building your trading brain, subscribe here to the channel and check out the video popping up right now about why candlesticks don't work. It might just change how you see every chart from here on out.